Welcome. We are the ESG Strategy Evaluation Team, and today we'll walk you through Rio Tinto's ESG strategy, its drivers, the challenges it faces, and the impact so far. Before we get started, we would like to acknowledge the traditional custodians of Australia and pay our respects to elders past, present, and emerging. Here is our agenda for today. Rio Tinto is a global mining leader. It is the top exporter of seaborne iron ore and a major producer of aluminium, copper, and now lithium. It has operations in over 35 countries and more than 57,000 employees. Rio Tinto has over 5 billion in cash, giving it flexibility to strategically invest and grow its operations. With its extractive profile and rising ESG expectations, Rio's decisions must now balance environmental and social impacts with financial goals. Rio Tinto's environmental, social, and governance transformation has been shaped by external and internal shocks, not corporate goodwill. Its environmental strategy largely focuses on decarbonisation, was stimulated by global agreements and investor initiatives such as the Paris Agreement, the Task Force on Climate-related Financial Disclosures, and the Climate Action 100 Plus initiative. These signaled that carbon emissions would carry a growing cost. Emissions must be transparently reported, and investors are closely watching the situation. The destruction of the Yukon Gorge sacred site in 2020 triggered social and governance reform, exposing serious cultural and governance failures. The project review commissioned thereafter revealed widespread misconduct, prompting leadership changes and a cultural reset. New global reporting requirements from the US SEC, ISB, and EU have reinforced these shifts. As a result, ESG data is now central to Rio Tinto's reporting, board oversight, and executive incentives. So what does Rio Tinto's environmental, social, and governance strategy look like in practice? Environmentally, Rio Tinto is focused on decarbonisation. It aims to cut Scope 1 and 2 emissions by 50% by 2030 through renewable energy projects, battery storage solutions, and electric vehicle transitions. It's also piloting its patented technologies like bio-iron and ELYSIS to reduce Scope 3 emissions and support green steel and aluminium production. Socially, Rio Tinto is focused on rebuilding First Nation community relationships through co-management agreements, including a recent one with the PKKP Aboriginal Corporation. It's also launched the Everyday Respect program to improve workplace culture after the project review exposed widespread bullying, harassment, and racism within the company. From a governance perspective, reforms have focused on transparency, with ESG data now feeding directly into annual reports and executive bonuses tied to ESG outcomes. Mohammed will now speak about the forces influencing the implementation and success of this strategy.
Thanks, Travis. Now I will analyze Rio Tinto's ESG transformation strategy using an integrated framework that combines Porter's five forces with SWOT analysis. This approach reveals how external industry dynamics directly shape Rio Tinto's internal strategic choices for their ambitious decarbonization journey. First, let's examine the industry context. Porter's five forces show up that ESG transformation has fundamentally reshaped the competitive dynamics in mining. We see high competitive rivalry as companies like BHP set aggressive targets, high buyer power as customers demand the green premiums, and the medium-high substitute threats from alternative materials. These forces create both pressure and opportunities for Rio Tinto's $7.5 billion ESG investment. Diving deeper on each force, competitive rivalry is intensifying with PHP's aggressive decarbonization targets and the race for green premium markets. Rio's ELYSIS technology provides differentiation. Buyer power is high because customers like Boosty now mandate ESG compliance and willingly pay green premiums. The threats of substitutes is significant. Enhanced recycling and alternative materials could displace traditional mining. However, threat of entry remains medium low due to the massive $7.5 billion capital requirements and the technological complexity, giving Rio protective barriers. Now I will analyze Rio Tinto's strategic position using a SWOT framework. Rio's strengths, 54 billion revenue and the ELYSIS technology directly address high buyer power and the competitive rivalry. Their global scale provide resilience against substitute threats. Weaknesses like the 32.6 million ton CO2 baseline create vulnerability to both substitutes and the competitive pressure. The Jog and George trust deficit reduces their negotiation position with powerful buyer. Opportunities emerge from buyer willingness to pay green premium and the first mover technology advantages. Threat include the standard assets from substitutes technologies and the aggressive competitor targets capturing market share. This integrated analysis reveals the four strategic responses. The SO strategy, counter high rivalry; WO strategy, address firepower; ST strategy, defend against substitutes; WT strategy, minimize entry threats. This framework showed that Rio Tinto's ESG transformation isn't just about environmental goals. It's a strategic necessity driven by fundamental shifts in industry competitive forces. Success requires aligning internal capabilities with external market dynamics. Now I will hand over to Aisha.
Thanks, Mo. And now onto the PESTEL analysis. Government and global policies like net zero commitments by major economies are part of the political factors, along with strengthened cultural heritage protection laws and international trade agreement ESG requirements. Economic factors include carbon taxes, ESG-linked financing, and a shift towards green commodities like copper and lithium for energy transition in the process of decarbonisation. Social factors are significant. Developing and maintaining relationships with stakeholders and allowing collaboration in a psychologically safe and genuine way has become a much higher priority as communities demand responsible mining practices coupled with heightened awareness of Indigenous rights and consultation. Rio Tinto have accelerated focus on women's participation and a diverse, inclusive workplace in this traditionally male-dominated sector where women represent only 15% of the global mining workforce. Many companies have targets to double female operational roles by 2030, and Rio Tinto are performing well in this area. In technological factors, renewable energy is becoming more financially attractive, and there have been development of innovative hydrogen-based steel production and ELYSIS trademarked smelting. And of course, artificial intelligence, machine learning, and Internet of Things deployment for mining efficiency and productivity gains. Environmental factors include extreme weather directly impacting operations, reversal of nature loss with biodiversity becoming an ESG priority, and a focus on waste and resource recovery, circular economy, water, and ecosystem management. Lastly, legal factors, including mandatory reporting in line with the Task Force on Climate-Related Financial Disclosure, strengthened cultural heritage legislation, and increased penalties for environmental damage are also important macro-environmental factors. Leadership should remember that decision-making processes are related to decision success. In addition to PESTEL analysis, forecasting and scenario analysis are important steps in the strategic process. All levels of the business need to engage in creating a strategic hierarchy. If employees understand and align with Rio Tinto's purpose, vision, mission, and objectives, the risk for decisions and actions to drift from the strategy is reduced, and this in turn assists with governance. Environment, social, and governance. Maintaining a laser focus on Rio Tinto's ESG strategy on these three pillars will ensure that these remain a priority across all levels of business. The process of decision-making in strategy development and the journey taken by the various stakeholders is as important as any final strategic documents and publications. And now I'll hand over to Sean.
Thank you, Aisha. Rio Tinto faces four major challenges in delivering its ESG strategy. First, balancing capital discipline with ESG ambition remains difficult. The company recently reduced its decarbonisation budget from $7.5 billion to $5 to $6 billion, reflecting the tension between short-term investor expectations and long-term sustainability investment. Second, rebuilding trust with traditional owners is a critical priority. The damage from the 2020 Juukan Gorge disaster continues to have a lasting impact on Rio's social license to operate. Third, the pace of carbon emission reduction has not kept up with stated goals. Achieving Scope 1 and 2 targets will require rapid deployment of renewable energy, decarbonised fleets, and infrastructure like wind and solar farms. Lastly, Rio is still addressing workplace culture challenges, particularly around bullying and harassment. Despite implementing 84% of the Broderick Review recommendations, bullying rates have increased to 39%, highlighting gaps in leadership, accountability, and reporting systems. In response to these challenges, Rio has initiated a number of targeted strategies to manage ESG investments. Rio is prioritising high-impact projects and forming strategic partnerships, such as the ELYSIS joint venture with Alco and Apple. This aims to scale up zero-carbon aluminium technology. On the social front, Rio signed a co-management agreement in June 2025 with the PKKP Aboriginal Corporation, a major milestone towards repairing community relationships. Additionally, Rio is investing in community benefit programs with not-for-profit partners to deliver tangible, localised outcomes. To accelerate emissions reductions, Rio is embedding climate-linked executive incentives and scaling up renewable infrastructure, including solar, wind, and battery storage solutions. Finally, to address the workplace culture, Rio is strengthening confidential reporting channels, enhancing leadership training, and linking cultural safety outcomes to executive performance, all aimed at building a more inclusive and respectful workplace.
I'll provide an overview of how Rio Tinto is tracking against its global strategic objectives, specifically looking at target achievement, value creation, and competitive advantage. In terms of financial performance, Rio Tinto has reported an underlying EBITDA of $26.3 billion for 2023, down from $33.7 billion the year prior. This is largely due to weaker aluminium and mineral pricing. However, they still delivered a final dividend that beat market expectations, demonstrating strong capital discipline and continued shareholder value even under market pressure. Operationally, the safe production system is showing real results. In the Pilbara, iron ore production increased by 5 million tonnes, with another similar increased target for this year. Their long-term vision for 345 to 360 million tonnes annually is well underway, supported by investment in projects like the Rhodes Ridge. At the core of Rio Tinto's strategy was the reduction of its operational emissions, and the mining giant has made significant strides in its decarbonisation agenda. In 2024, they invested nearly $600 million in emissions reduction initiatives and cut Scope 1 and 2 emissions by 14% from their 2018 baseline. With a target of a 50% cut in Scope 1 and 2 emissions by 2030, equating to 16.3 million tonnes, fell well short, with Rio's 2023 disclosures indicating that net emissions totaled only a measly 4.9 metric tonne reduction since 2018. From a value creation perspective, Rio Tinto has maintained a strong balance sheet and is advancing key growth projects such as the Rincon Lithium project, which is strategically aligned with the energy transition. And when it comes to competitive advantage, the innovation team is helping embed sustainability and operational efficiency deeper into the business. Their ESG focus is becoming a differentiator in the increasingly values-driven market. That said, challenges remain, particularly around environmental research sites and inflation-driven cost pressures in Australia. Rio Tinto's strategy is well executed, they are largely on track to meet key goals, and they're delivering long-term value, and they're actively positioning themselves to remain competitive in a resource-constrained, sustainability-focused world. In evaluating the effectiveness of Rio Tinto's global strategic decision-making, one clear insight emerges. External pressures, not internal conviction, have largely driven change. The destruction of Juukan Gorge was a turning point, exposing serious governance failings, but also catalysing reforms that reshaped the company's approach to social license and cultural safety. From a global strategic perspective, Rio Tinto's decision-making effectiveness lies in its ability to convert external risks into structured, value-generating responses. By aligning ESG goals with capital discipline and operational priorities, it has improved climate reporting, pioneered decarbonisation technologies like ELYSIS, and linked executive incentives to ESG outcomes. However, challenges remain. Emissions reduction lags targets, workplace culture issues persist, and community trust must continue to be rebuilt. Effective strategic decision-making must now focus on execution consistency, leadership accountability, and embedding ESG into core business practices. Ultimately, Rio's journey demonstrates that the quality of strategic decisions and how they're implemented is just as critical as the strategies themselves. Thank you.